Ladies and gentlemen, we have lots of news today, including a negative GDP report. This is one of the things that I warned about last night that I was kind of nervous about, that our expectations were for positive Q1 GDP. If it came in negative, Wall Street would not like that, and we are seeing the results of just that today. Although personal spending came in stronger than expected, inflation is virtually gone in month-over-month PCE, and personal incomes are holding pretty steady compared to last month. We do have some huge catalysts here over the next 48 hours or so. I will share those with you in this video. We also got two speeches today from Trump and many different headlines to cover, including around trade with China. Really, the big market moving catalyst today was your GDP report. The expectation quarter over quarter, the advanced estimate for Q1 was expected at positive 0.3%, as high as 0.5%. We came in at negative 0.3%. That was the big risk of today, as I highlighted yesterday, was a negative GDP report, that Wall Street would not like that. And that's exactly what happened. And Wall Street did not like it. Okay, there's other subcomponents here, like employment cost benefits quarter over quarter, wages quarter over quarter, and the employment cost index quarter over quarter. None of that really matters too much. GDP or PCE quarter over quarter as well. That also doesn't matter as much. GDP sales quarter over quarter came in at negative 2.5%. That's a pretty rough number. And PCE prices quarter over quarter came in on the headline at positive 3.6%. That's also a pretty rough number. Now, we got the ADP employment change that came in today at 62,000 jobs. The forecast was 115,000. So it came in 50% lower than expectations. This is essentially the private payroll number, like the private non-farm payroll number. That also doesn't help things at all. Chicago PMIs came in at 44.6. The expectation was 45.5. So those came in lower than expected. Good news is core PCE month over month came in at 0.0%. The expectation was 0.1%. So that came in better than expected. Personal income came in line with expectations at 0.5%. Personal spending came in at 0.7%. That was better than the estimated 0.5%. So this did not go into the GDP report today. So this is going to help boost up the GDP report a little bit. But is it going to be negative still? It's close. Okay? It's going to be close. But personal spending coming in better than expected kind of saved the day. If personal spending had come in bad, you would see a much worse market than what we are seeing today. Donald Trump says that I know China is doing very poorly right now. I mean, this is really just a big game of chicken at this point, because China, they are the manufacturing machine, and all of a sudden, US companies really can't buy from China anymore. There's like a trade embargo against China. Okay, fine. It hurts China first. But what do you think is going to happen 3 weeks from now when shelves start to run dry in grocery stores? Okay, prices are going to skyrocket, and we're going to have hyperinflation that leads to a depression if that lasts for any meaningful period in time. That's where we get hurt from that. It's not just China. We will get severely hurt from that as well. It's only a matter of time before a pause on China tariffs comes. The faster that comes, the better. Now, I actually posted this on X and tagged Trump. If real Donald Trump doesn't pause the China tariffs, we will have hyperinflation that leads to a depression. It's actually simple. If products sitting on shelves collapses, well, supply and demand. I say don't lead this economy off a cliff. Be smart. Surprisingly, a lot of people disagree with this. A lot of people seemingly do not understand basic supply and demand principles. I don't know how you can be an investor and not understand supply and demand, okay? If supply of a product falls 20, 30, 40, 50%, but demand stays constant, what does that do to pricing? I mean, this is like high school level economics. Prices will go up, assuming there's still the same amount of money in the economy, which there would be. Prices would go up. Okay, then what happens? Well, disaster strikes because people aren't going to be able to buy those products. So what happens? Companies either have to keep prices the same and just go out of business, okay, because of the tariffs, if they cannot switch supply, which at this point, you either can or you can't. Companies are figuring that out right now. There would be some companies that would do okay. There would be some companies that would completely go out of business, okay? Or, I mean, you just sell what you can at inflated prices and make the best out of a shitty situation, which would lead to, again, a depression and or hyperinflation. Another comment here says short-term thinking. I don't know where this mentality comes from of, I mean, short-term thinking. Sure, long-term, we want things to be made in America, but to cause a depression in the meantime doesn't exactly get you to your final destination faster, right? It slows down the entire process. So again, it's only a matter of time before tariffs are paused on China. There is actually no choice in this matter unless you want a depression, unless you want hyperinflation. Again, it is simple economics. If you were to go to Walmart today and there's 50% less products on shelves, what do you think is going to happen to pricing? Okay, it's going to go up quickly, very, very quickly. I mean, let's not overcomplicate this. Whether this is good or bad in the long term, it doesn't matter. Over the next couple of years, hyperinflation or depression would not be good for anyone, at least not Main Street, unless you have a lot of cash ready to buy the dip. That would be the individual who would benefit. If you have a shit ton of cash and you're ready to buy. If that is you, let me know down below in the comment section. Nonetheless, Trump says that he wants China to do well. He wants every country to do well. U.S. Commerce Secretary Lutnick says pharma knows they have to come home. He says that sovereign wealth funds want to invest in the U.S. Trump says that he does not want China's product unless they're fair. Also, fairness with China includes IP, that is intellectual property. Here's the full quote here. It says, at a certain point, I hope for a deal with China. I am talking to them. Fairness with China includes IP. So again, first step in negotiating a trade deal is pausing the tariffs. That's commonsensical. Trump says, I am saddened to hear that China is getting absolutely hammered. And he goes on to say that tariffs haven't kicked in yet. Also in the news, Saudi Arabian officials in recent weeks have briefed allies and industry experts that the kingdom can sustain a prolonged period of low oil prices. You get low oil prices when there's weak global demand. Okay, that's basics here, unless they just overpump, oversupply the market, oversaturate the market. But I think they're really referencing like a global recession here. Donald Trump says that investments in the US include chips and car companies. And he says that it takes a while to get domestic facilities built. Donald Trump says that he was very against everything Biden did on the economy. He says that the GDP numbers today reflect Biden, not him. He says that core GDP was up despite distortions like imports. And Trump actually praises gross domestic investment. Now, China today lifts their sanctions against European Parliament members, which is maybe a sign of de-escalation between China and Europe. Also in the news, the US wants Ukraine to sign 2 additional documents as well as the minerals deal, and Kyiv thinks they need more work, source familiar with the matter says. US Commerce Secretary Lutnick says tariff revenue is coming in for external revenue service. He also touts removing de minimis to help small businesses. Donald Trump says we want to put a brand new air control traffic system in. Here on the day today, the Dow is down 0.57% at the time of recording this video. S&P 500 down 0.9%. NASDAQ down 1.25%. Russell 2000 down 1.31%. Not a huge surprise. Whenever you have recession fears, the Russell is going to sell off more than other indexes. The VIX sitting at 25.41, up about 5.1% today. Gold is breaking below $60 a barrel today at $58.91 a barrel, down about 2.5% today, again on a weaker U.S. economy. That is what really moves the price of oil. And says that he has no doubt that Russia's relations with Europe will be restored sooner or later. And U.S. auto loan applications are being denied at the highest level in over 10 years, according to a New York Federal Reserve new report that's out. I mean, you're sitting at almost 35% rejection rate. Here today in After Hours, we do have earnings from Microsoft, Meta, Robinhood, Qualcomm, Albemarle, and some others. So definitely going to be a big day today in After Hours as far as earnings and market cap wise. Big story, though, is tomorrow in pre-market, you have Eli Lilly, Roblox, CVS, MasterCard, SiriusXM, McDonald's, Shake Shack, Builders, First Source, and then in After Hours are really your big dogs, Amazon, Apple, Riot, Airbnb, Reddit, Big Bear AI, Atlassian, Five9, and some others. Amazon and Apple are, I mean, the two big companies of this earnings season. Like, they are the ones that are going to tell us how tariffs are going to affect their business, how consumers are, you know, expected to react, what margins could look like, how fast they can shift, especially Apple production to the US or other less tariff countries. I mean, tomorrow's going to be a massive day. Today in After Hours is as well, but the big story of this whole earnings season is Thursday. Tomorrow, we also have initial jobless claims, expecting that at 224,000. ISM manufacturing PMI is expecting those to weaken to 48. Employment expected to fall as well to 44.1. Manufacturing's just been pretty weak lately, so I don't think that's going to move the markets too much. But that leads us into Friday, when you get your non-farm payrolls report, expecting around 130,000, and your unemployment rate expected to hold steady at 4.2%. So you still have big catalyst over the next 48 hours. The CNN Fear and Greed Index today is falling to 33. Yesterday, it was at 37, so that's down about 4 points. Market momentum in extreme fear. Stock price strength, extreme fear. Stock price breadth is greed. So you're actually seeing a broad participation in this market. When you are going up, a lot of stocks are going up. When you're going down, a lot of stocks are also going down. Put and call options continues to be in extreme fear. There's a lot of put buyers out there still. Market volatility is neutral. Safe haven demand in fear, and junk bond demand currently is neutral. Tomorrow morning, we will be getting a new AI investor sentiment survey update. The last one we had was 55.6% bears versus 21.9% bulls. Over 2 times as many bears than bulls. Even neutral investors at 22.5% is higher than bulls. I've never seen that before. This highlights to me there's a lot of room for sentiment to shift in a more bullish direction when we do get that pause on China tariffs, which I think is literally impossible to not happen. I mean, like, does Trump really want a depression? Does he really want hyperinflation? I don't think so. Does he understand that if you were to, let's say, walk into Walmart and have 50% less of products on shelves, does he understand what that would do to prices? I think so. Like, come on now. That's like 9th grade economics, basic 101 kind of stuff here, okay? There's no way you can't, like, not pause the tariffs on China. Like, let's put it like this. I don't think Trump's trying to, you know, destroy the economy. I think he just wants fair trade. I mean, I think what he says he wants, like, he wants fair trade. He wants manufacturing back in the US, but he knows a depression or hyperinflation is not the way to do that. It's also not exactly the best way to bring down interest rates, right? That's not a very productive way to get rates down, to say the least, because even if you had some kind of depression, you would think rates would go down on that, but if you have hyperinflation at the same time, that's not exactly going to bring down interest rates. I think you just have a calamity in the bond market, and that's the last thing Trump wants. The percent of stocks trading above their 50-day moving average falling a little bit today, about 3% of stocks breaking below their 50-day moving average, currently at about 35%. So you're still at the low end range of where we've been at over the last 5 years. Once you get to like 50, 55, 60%, you're kind of in a normal range. Anything above that, you're in a higher end range. So we're far from being, super bullish on markets, if you didn't know already. So again, over the next 48 hours, it's going to be pretty volatile in markets here. Again, I just want to reiterate, there's almost no way around it. You are going to see a pause on China tariffs. I don't know when that is going to happen. I would have hoped it would have happened already. Tomorrow is Thursday. I was hoping by Monday we were going to get a pause on China tariffs. The fact of the matter is, in just the next couple of weeks, shelves in stores are going to be running low, okay? That's going to create some upside pressure on inflation. There's no other way to put it, okay? If this were to last for any meaningful amount of time, you could see 50% less capacity in grocery stores. That would create a hyperinflation dynamic, okay? That would create a depression. There's no way it doesn't happen. And I think it's kind of coming down to the wire here. I think you logically only have like a week or so, maybe 2 weeks, until you start getting damage, like true damage that gets done. Because again, even if stores have, let's say, 3 weeks of full inventory, 3.5 weeks, 4 weeks of full inventory, it takes some time. If let's say 2 weeks passes from now, then we get a pause on tariffs, it's going to take at least a week or two to get those products from China to the US, to stores, right? You would see the impact of this much faster than a lot of people would even think, okay? So I do think that's worth considering as well, that time's really coming down to the wire. And it sounds like Trump wants to negotiate with China. Again, the only way to do that, I think step one, is to pause the tariffs. That's just my opinion. That's just my thought. Let me know what you guys think down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.